I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. Welcome back to the show, Tim.
Jim, thanks for having me as always. Man, you sound like you're under the weather a little bit.
Well, yeah, some mysterious lung infection. We just know it's not pneumonia, but we don't know what it is. Anyway, I'm battling through, and that's all you can do when you do a business like that, where you chat with people every day. Everyone's glad that I don't do in-studio interviews. It's all on the phone. Tim, the price of gold, edging a little higher, but I guess it's been mostly sideways action in the year. Do you see or anticipate any big movements in gold will go short-term and then long-term?
Yeah, short-term, the advance out of the July 10th low still intact. And, again, I think it's counter-trend and that we go lower. When you look at the chart, it looks like the higher degree cycle top was made back in April, and depending on what contract you're looking at, maybe early June, but it looks like that high is in, and the expectation still is to move lower into the 9-year cycle low.
So many people have said with a U.S. government that just seems to be churning up dust but going nowhere, they were hoping and expecting that there would be movement, but there isn't. And, of course, people usually run to gold being secure in troubled times. Do people look at the U.S. government as being in trouble yet?
I don't know how people look at it. I mean, I look at it as, I think if you look at it with a sound eye, obviously they're how else do you see it but trouble? And then we have, the equity bubble and the underlying problems with the economy and so on and so forth, and the political landscape. Yeah, it's trouble. And that may be, some of that may come to a head coming out of the 9-year cycle low, but like I said, man, we need to get that 9-year low in place, and then I think the potential for gold to do its thing is on the table. And to your point, there's always some fundamental news that seems to come along and make a cycle top or make the cycle bottom or whatever, and propel things. And we get that low in place, it tells us that there's something out there, but not yet. And also looking at gold stocks, I'm very bullish on them longer term, but again, we need a little more patience. We're not quite there yet, I don't think.
So if you had a choice between gold bullion or gold miners, would you pick one over the other, or should you spread things around?
I think you should spread things around. I think obviously having some physical metal is a good idea. And I think, for speculative purposes, that the gold stocks are going to be probably the better bang for the buck. So I think there's, the prudent thing is obviously both. No question.
We'll have more with Tim Wood right after the break.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the 4th largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
Welcome back. We're chatting with Tim Wood. Tim, what do you see for other commodities outside of the precious metals?
Well, the canary in the coal mine for me is the CRB index. I feel like that's our beacon, if you will. And so far, nothing has changed. I think the structure there is telling me that, we're seeing anything that any advance should be counter trend, and that we should ultimately go lower in conjunction with that 9-year cycle low in gold. I keep going back to that, but it is what it is. And, the same thing, therefore, with crude oil. We had this bounce coming out of the June low, and then more recently we had a bounce out of early July, but I still there as well. I think it's counter trend, and that, it goes lower as well, and pretty much with the entire commodity complex. Now, if we see something change with the CRB, then at that time it changes, but right now, I don't see it. So, basically lower prices in commodities, I think.
What about the velocity of money? I know we've talked about that a lot in the past.
I get that data from the, where is it? The St. Louis Fed, I believe, and the last time I looked at it, it hasn't changed. None of that has changed. The velocity of money, the volume characteristics of the stock market, the job participation rate, none of that stuff has changed. And yet the market, it continues to levitate. And in fact, I was on the phone an hour before you called today with a Canadian subscriber, a guy's been a long-term subscriber. And he was telling me, he was calling, he said, man, I see cracks, and, he had some frightening thoughts. I mean, he sees what's there, sees what's coming. He was talking about the housing bubble in Canada, and, worried about the outcome of all this when the bubble does pop. And, according to his own work, he sees the bubble as well. And so, anyway, I'm getting long-winded, but the point is that there's this tremendous levitation with equities that continues and continues and continues. And as I've said before, I think that's camouflage for the underlying economy and those underlying factors like we talked about. I mean, the volume characteristics, the bearish volume characteristics of the market have not changed. When I look at, I've tried to justify the advance technically, and the only thing I can say is that it hasn't broken yet, in the sense that, we don't have a Dow theory primary bearish trend change. I don't have any negative cyclical structure in place, so the levitation as far as price absolutely is still intact. But when you dig down and look at it, like when I compare the intermediate term internals of one intermediate term cycle to the next, and when I dice and slice that data different ways, I keep coming up with the same answer. Each of the intermediate term advances are weaker internally than the previous. And that began based on some of the data, depending on how you dice and slice the data. And I'm not picking, I don't mean for it to sound that way at all. I'm saying some of it is so negative that following the initial blast out of the 2016 low, it immediately, the very next intermediate term advance, it started, waning, if you will, weaker and weaker and weaker. And so there's no other way to look at that. It's like going to the doctor and getting an EKG. I mean, it is what it is. And so the market's still alive, but it's got one hell of a negative EKG when you dig down below. And so, until we get a structural break and a Dow theory primary bearish trend change, like I said, that is the key. And until that happens, it's just more of the same. And here's the thing, and I was talking to this with my Canadian subscriber buddy. He was asking or saying, we were kind of comparing those, and he's a big historian, had looked at previous bubbles going back to the 1300s. And the common denominator always is that when the bubble burst, it burst. You don't just back out of these massive expansions like this. They burst. And his fear was the same as mine, is that the longer it goes on, the bigger the bursting of the bubble. It's just the way it is, and I think that is in part why we see such an effort to try to hold it together. I mean, kick the can down the road and let it happen, at some future date as long as possible.
We'll have more with Tim Cyclesman Wood right after this.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead zinc silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineered gold mine in the Atlan district of northwestern BC. Check us out at blindcreekresources.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com.
Welcome back. We're chatting with Tim Wood. Tim, with the housing bubble in Canada, I've heard critics say already the government upped interest rates just a 0.25%. But there's always the hint that there will be more this year. The same thing from the U.S. Fed. And they also brought in regulations in Ontario and in British Columbia to put a 15% tax on foreign buyers. They've stiffened the mortgage rules. Well, a lot of people are saying, look, why don't you just let the natural process happen? Because once a government gets involved and starts slapping in regulations and rules that didn't exist before, that really changes the mix as well. And they're fearing that this could be a government-caused recession if the bubble breaks.
I don't disagree. I think that they need to stay out of basically everything and let the free market be the free market. From talking to, again, the guy from Canada about the housing bubble, he says that the bubble's worse than what we had in the U.S. in 2007, 2008. And, as I look at, after that phone call, I was looking at the one of the popular housing indexes, the HGX, the Philadelphia Housing Index, and it's back to levels. I'm looking at the chart now. It's back to the 2005 peak. When I look at, there's a Dow Jones Home Construction Index. It is not. It's lagging, and the way I view that is it's like a non-confirmation. It's a little bit of a warning there. And he's saying that he's seeing some cracks in Canada with the housing bubble and that it may be starting to give just a little bit. Are you seeing that?
Well, in Toronto, we do have word that people are walking away from $40,000 deposits, realizing that they've just bitten off more than they can chew. Yeah.
There's no... I just don't see any way out of the eventual bursting of the bubble. And like I said, I keep referring to this guy because I just got off the phone with him and it was good conversation. But, he's a great market historian as well. And like we said, that's what happens. And I made the same comment in previous interviews. I said, show me one example of one bubble that hasn't ended, badly. I mean, they all do. I guess the debate is that people, I've also talked about this many, many times, is that when you get into one of these bubbles, people don't recognize them because something becomes so extreme for so long, then it's accepted as some kind of a new normal. And, people that warn about the bubble and so forth, they're considered the kook. But, I don't see any way out of some pretty extreme stuff once it bursts. But again, we have to see that Dow theory primary bearish trend change.
Are we set up like we were 2 years ago when we had that super correction on August 25th?
No, at that point we had more of the DNA markers in place. We had a Dow theory primary bearish trend change. We had some other stuff in place that we don't have now. Now there are some cracks at this time, but they're minor. And how the market responds to that. I mean, does it cave from the cracks and then the bigger cracks appear, or do the cracks continue to form and give us more of a warning? I don't know. That remains to be seen. And this is not a cop-out. I don't mean for this to sound like I'm not avoiding the answer. What I'm trying to say is that how do I say this, put it in words, as resilient as the market has been for whatever reason, the most important thing is that Dow theory primary bearish trend change, because everything else leads to that. Everything else is part of the setup to that end. And until that's on the table, it can continue and it can take a turn here and a turn there. And when I say turn, I'm talking about the setup. The setup can morph and drag on. So that is the key. And when that happens, I think it's going to be pucker time, because that puts at that point, it's on the table that things can turn ugly and turn ugly quick.
How are the transports doing? Because they seem to be a good indicator, the canary in the coal mine, that something's about to happen.
The transports are showing some, they have, started to decline the last few days. We have begun to see a little bit of a decline there. And we've seen, now let me preface this just a little bit, the utilities. We've seen some weakness with the utilities. Now, utilities are not part of Dow theory. And some people want to argue about that, but here's the proof. The Dow theory, the utility average itself did not come to be until 1929. Charles Dow died in 1902. So it was 27 years after his death that the utility average even came to be. So without question, utilities are not part of Dow theory. But that said, we are seeing some indications. Like I said, there are cracks. We see cracks, but I don't have anything that is solidified yet. And when you, like I said, when you look at the relative performance of the internals of one intermediate term cycle to the next, when you look at the volume characteristics and all the other underlying stuff, there are problems, and it is a mirage. But what's going to be the catalyst remains to be seen.
Tim, thank you so much for the hard work you do for us.
Jim, I want to thank you. And like I said, I know that the market has been relentless. I know that some of this stuff is hard to believe. And, I hope people are listening. And, I'm not just fear-mongering. Look, I know also, admittedly, that the market, as far as equities, have held up far longer than any of us ever imagined. Any of it's amazing, actually. They've done a masterful job at holding things together. But it doesn't negate what it is. And in the end, they're not going to, you can't negate the triggering of a bearish trend change. I mean, it has to happen. That I can guarantee. If there's nothing else I can guarantee, that will happen. And then when it does, the opportunity is at hand for things to get ugly. Will they? I don't know. But the opportunity is dang sure going to be on the table. And from a financial perspective, that's bunker time. So we'll see. I hope people are listening. And then, on the positive news is that we have the 9-year cycle low in gold. There's opportunity there. So it's not all bad.
Tim, thanks again.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. Check out our YouTube channel, Talk Digital Network. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.